Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. Well, I want to wish everybody happy MLK Day. The markets are closed, right? Okay, so in the markets, not much going on there. They're kind of going sideways. I still think we're within striking distance of making a new high on the S&P 4818. We'll see if we get there. Okay, so I keep saying that there's going to be a recession, right? And I'll be the first to admit that we've gotten good at kicking the can down the road. Now, why do I think there's going to be a recession? Well, we have what's called an inverted yield curve. An inverted yield curve just means that the short end of the curve, the 2-year, is paying more than the 10-year or 30-year. It's inverted. It's the wrong way. It's slanted this way. It's got to be slanted this way. And this is the year that it will reinvert. It's getting close now. The 10-year is at 3.95%, but the 2-year is still above that, 4.35. But the inversion is starting to happen. It's starting to narrow. Now, this is the longest time in recorded history for the yield curve being inverted. Now, what that means is a recession's coming. But Mike, it's different this time. It's always different, right? This time we're just going to print money. We're never going to have a recession again. You can ask Janet Yellen. Now, that's not my take. My take would be that we've been inverted for the longest time in recorded history. We may skip right over the recession and go into a depression. That's just my take. We'll see how that all plays out. Okay, now here's a couple of things that, I just found kind of funny. Okay, so inflation, right? Inflation last week, the numbers came out, and inflation's headed back up, okay? It was headed down to 3, but now it's turned around, and we're headed back to 4. Now, this is their numbers, not my numbers, not the numbers of real inflation. Real inflation, go on shadow stats, it's about 7%. But okay, so now inflation is starting to run hot again. Oh, it surprised everybody, right? We're headed back up, okay? That's shocking, but here's the thing. Why, somebody explain why the Fed's going to lower rates when inflation is going up. Okay, why? Well, let's just think about it. Let's think about this. Does the Federal Reserve want prices to come down? No, they don't. They'll even tell you we want inflation 2%, increase 2% every year. They don't want prices to ever come down. See, prices are at a record high. They've never been higher. And they're still heading higher by 7% a year. But the Fed, they don't want to tell you that. They want to tell you that everything's great, that we beat inflation. That's why we're going to start to cut rates. Now, the Fed agrees they're going to cut rates 3 times this year. 3 times, okay? Market's expecting 6 times. Okay, I'm telling you, why are we cutting at all when inflation is headed back up? We are waving the white flag. We say, inflation, you won, we surrender. Now, the reason, of course, we're actually cutting rates is because of the banking system. Otherwise, the banking system is going to start collapsing. And we're going to talk a little bit more about this. Do you realize that it hasn't even been a year since Silicon Valley Bank went down, took all the money and bailed out everybody in that, right? That was just a mess, right? But then there were 4 other big banks that went down since then. And we're far from out of the woods. We're not out of the woods. They're just papering over this stuff. Let's paper over it. Let's not talk about the banking crisis going on. As a matter of fact, we had Jamie Dimon come out. Record earnings. He's never made more money. The best earnings on record. And here's why. He doesn't have to write down any of his bad assets. Doesn't have to take the assets down. Doesn't have to mark them down to market. As a matter of fact, if he buys something and it loses money, say he bought something, say he went out and bought some Apple stock and lost 50%. He didn't have to write that down. All he has to do is bring it back to the Federal Reserve and they'll give him 100%. He lost half your money, but the Fed will give him 100%. This is called the Bank Term Funding Program. You can Google it. Now, in theory, that started in March when Silicon Valley Bank went down, because they didn't want to have 100 bank failures last year. So they started this program where you can turn in your bad assets and get 100% of your money back. So it's kind of like going to the casino, right? Okay, you're betting on red or black on the roulette table. Now, every time you win, you get to collect the money. Now, if you lose, you just send it to the Fed and they give you your money back, and then you keep doing it. Win, you keep the money. Lose, send the losses to the Fed. Now, who is the Fed really? Well, the Fed is, they're me and you is who's going to be paying for it, right? Taxpayers going to be paying for it. But so Jamie Dimon, he gets his big paycheck, right? He has record profits, but the banks, they've already lost your money. I don't feel safe with the banking system at all. That's just my take. Maybe your take's that they're completely safe and you don't mind keeping all your money in there. Okay, well, that's fine. That's a possibility, right? Okay, now what else happened last week? Oh, this is interesting. I talked about this a little bit. The Bitcoin ETFs came out. I think there was 10 or 11 of them brand new, right? Now, what happened on the initial day? Popped right up. And then they just started beating it like a drum. I mean, they were just beating on that Bitcoin, down 20% from the high of that day and down 20% just in 2 days. I mean, Bitcoin may be at zero by the end of next week, but I don't think they'll keep beating on them this hard. But I'm telling you, see all the Bitcoiners, they were so happy that Bitcoin's going to be an ETF. The Moon Boy said we're going to $1 million. Look, once it became mainstream, which it now is, right? I mean, you're in the belly of the beast. You're in with Wall Street, and they're going to beat it like a drum now. They're not done beating it. We may get a little bounce up before they start beating it again. They're going to beat these things down. Now, they don't care if it goes to zero because they're going to make money all the way down, and they don't care if it goes to 1 million for you Moon Boys. It may go to 1 million. I'm not saying it's not, but what I am saying is they're going to beat it down. But Mike, you're just a boomer. You don't know anything about Bitcoin. That's correct. I'm a boomer, and I really don't know anything about Bitcoin. What I do know about is Wall Street, and Wall Street's going to beat this down. They're just going to beat that Bitcoin down. So I'd be real careful right here. If you're thinking about jumping in and buying some Bitcoin, you got some gambling money. Maybe it saves you a trip to Vegas. Throw $500 at it. You know, that's fine. Out, no problem there. But they're going to keep beating this down for a while. It may get a little bounce, and then they'll beat it down some more. That's just my take. The boomer that knows nothing about Bitcoin but knows a lot about Wall Street. Wall Street finally got their wish. They got 11 Bitcoin ETFs out there. I mean, that's like double the number of gold and silver ETFs. That's probably, 11? Do we really need 11? I guess if you're going to beat it that hard, you need 11, right? All right, let's move on. I got carried away there. Sorry to all you Moon Boys. All right, so what's going on with the home market? Well, we had good news there, right? We had good news. Okay, KB Homes, they came out and they said there is a significant improvement in home buyer demand. Significant improvement in the home buyer demand. That's fascinating to me. Okay, they say that the home buyer confidence has increased. It's increased. If you're a home buyer, has your confidence increased? Okay, look, housing's a mess in my opinion. We'll talk a little bit about this, but they think that this is really good, right? Okay, now here's the thing. There's been this significant increase in home buyer demand. So KB Homes throughout the year has only had to drop, the prices went down roughly 5%, let's call it 5%, but it's much worse than that. You see, they're the only game in town because, instead of charging the 8% mortgages, they bought those down also, which cost them $20,000, $30,000, $40,000 a deal. So it's really down about 10%, but let's just go with 5%. So if this home buyer demand is so great, why are we dropping our prices? Look at across the nation, the number of listings are going up across the nation. Nationwide, we're going up. We're getting more inventory. Now, why are we getting more inventory? Because people are dumping their house onto the marketplace with no buyers. See, the buyers, it's frozen up. It's frozen up there. Right? Now, maybe KB Homes, hey, they went, significant. Who knows what that means? Maybe they didn't sell any. And hey, we sold one. We got a sale. That could be significant. That's like a 10,000% increase from 0 to 1. I don't know how many homes exactly they're selling, but I will say their stock's doing well. You got to give credit where credit's due. Their stock's trading about $60, up about 70% last year, 70%, because the lack of inventory in the existing home sales made them the only game in town. When the existing home sales, they're charging 8%, KB's charging 5%, throwing in all the all the upgrades, all the, the granite countertops, the swimming pool, the air conditioning, whatever you want. We'll throw that in too. We'll buy that rate down. We'll lower the price 5 or 10% because they have to sell homes. And so their revenues, sure, revenues shot up, stock shooting up, but I don't think it's going to play out that way. That's just my take. Maybe it does. You see, I don't think there's that many people that want to go out right now and buy these overpriced homes. Now, not when you can rent the same home for 50 cents on the dollar. Why do you want to pay twice as much as say, hey, I own it? I'd say, hey, you're a bag holder, but that's just my take. Look, at the housing market's in a mess, right? Okay, debt to income ratios have never been at more of a record high. Oh, over 40% right now. That's way bigger than the great financial crisis with the subprime mess. 40% loan to value ratios. I mean, not loan to value, but debt to income ratios. That's high. That's high. And it's because people have so much debt. They have a lot of debt right now. I mean, everybody's got a lot of debt out there. Our government's got 34 trillion, but the average person out there swimming in debt. Credit cards of debt never been higher. So what has happened, it's made house affordability has hit a record low. I mean, we're at the bottom. Could we go lower? I suppose if they shoot the houses up, sure. Let's double the price of a house and see how affordable they become. I really don't know who's going to be buying these, but you see, there's a lot of stuff that's in turmoil right now. I mean, the whole banking system, which really just scares me because, they're coming out record profits, but I know they're all insolvent. If they had to mark their assets down to book value, they would be insolvent. There'd be a run on the banks. That's why they don't have to do it. That's why we can finagle with the accounting practices and say, no, those are all good assets, even though, commercial real estate's down 50%. The bonds are down 30%. And that's what these guys invested in. They've lost your money. They don't have your money. They have a bank run. That's what happened to Silicon Valley Bank. You see, what happened is they took the money and invested in the long bonds. Long bonds dropped by 40 to 50%, but then they had a bank run. People wanted their money out because the word got out that they were insolvent. Well, they're not the only one. All these banks are doing the same thing. Now, there's going to be a liquidity crisis. There's going to be a credit freeze, if you will. When you go to a bank right now, it's the good times. You can go in there and you can get a loan to buy Billy Bob's house. Now, Billy Bob already sold. He got out up here, but you can go out and get a loan, is my point, to go buy one of KB Homes. KB Homes, they'll give you a loan. They'll do their own financing in some cases just to get rid of their inventory. They got to sell this inventory that they're stuck with so they can go and build more homes. They're a home builder. They don't want to hold the homes. They don't want to rent the homes. They want to get these off their book as quickly as they can. Now, if they can't sell them, they might go to renting them. But you see, renting right now is about half the cost of owning. So the real estate market is really just, it's in a mess, and it's going to get worse. And if you think that this is the bottom, you see, I think these builders, they come out and I don't know how much they pay Yahoo. They pay Yahoo money to print these articles to get some more suckers to come in and buy all their homes. Maybe they do. I'm not sure. But anyways, it's Martin Luther King Day. I want to thank everybody for coming on and watching the show. Give me a thumbs up. Why not? Martin Luther King Day. Why not? Hey, get out there, everybody. Have a great Martin Luther King Day, and hit the subscribe button so we can talk more later in the week. Bye-bye now.